Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my February pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been very flat since the last few days, which jumps due to one semi-viral shorts. Despite not growing much in the daily number of visits and new subscribers, the evolution continues to grow, although it is necessary to find a new approach to try to attract more people. Unfortunately, this month we have not surpassed the goal of reaching 750 subs. But even so, we have remained very close. For this month the goal will be to reach 800 subscribers and stay closer to 1,000 subscribers. The evolution of the investment made in January has not been so good, as it decreased around 5%. Vici Properties and Texas Instruments also have dropped almost 4%, however, Comcast and Texas Roadhouse have had an excellent month with an increase of 6% and 9% respectively. Despite this, since I started investing, my portfolio has grown by around 5%. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term, so this large drop of NextEra Energy in the last month does not worry me too much, since I fully trust my estimates of the intrinsic value of them. The good news is that during this month we have received dividends. Specifically €1.28 of Vici and 68 cents from Comcast, that make a total of €1.96. Moving on, I currently have 27 stocks from different sectors on my watch list, but for today's video we will only focus on those that are below my estimate of their intrinsic value. Because remember, you always have to buy low and sell high, and not the other way around. As simple as it may seem, most investors lose their money by not following this advice and selling their shares when the price has already fallen, and panic and buying them when everyone is talking about them and the price is overbought. Additionally, we will not consider companies and sectors that we already have in our portfolio, to diversify our portfolio and reduce risk. I will make one expectation: Starbucks, due to his dip in price. This month, I introduced new companies and sectors to this watch list with new intrinsic values for me. So we will go on to analyze in depth companies such as JM Smucker, Starbucks, Archer-Daniels-Midland and United Parcel Service, since they are 4 companies that have an upcoming ex-dividend, and some of them will allow us to receive dividends this month again. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both ADM and SJM have a dividend safety of 80, while Starbucks and United Parcel Service are between 65 and 70. Even so, I consider that the safety of all 4 is good. Regarding the dividend yield, UPS is a little further away with 4.59%, while SJM and ADM have a fairly similar dividend yield. Finally, Starbucks is left behind with 2.45%. However, if we look at the dividend growth, Starbucks is the best company, with growth between 7% and 11% each year. On the other hand, United Parcel Service had spectacular growth, although the last increase was very poor due to the decrease in profits and income that we will see later. Regarding the evolution of income, earnings and free cash flow, the best company is Starbucks, while ADM has obtained the worst values due to its lack of growth in all these metrics during the last 10 years. As we can see in the following picture, Starbucks is gradually moving away from the other 3 companies in terms of score. As I mentioned in my previous video, I want to make investments in companies that make buybacks, and all of them meet that requirement. Although Starbucks buybacks have clearly been broader. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. UPS and JM Smucker are close to the 5-year average price-to-earnings ratio, while the other 2 are below them, indicating an undervaluation of their respective prices. However, be careful with Starbucks and UPS, since between 2020 and 2021 both are trading at high valuation in PE that makes the average be higher. Moving on to yield on cost, here Starbucks is also the clear winner with over 10% compound annual growth rate over the last 10 years. On the other hand, the other three companies rarely have grown their yield on cost over the last decade. Finally, we will see the total return that each stock has offered over the last 5 years. With two companies, UPS and SBUX, have managed to almost reach the 60% that marks that 10% annual profitability. However, JM Smucker and Archer-Daniels-Midland have achieved a total return during the last 5 years of around 45%, due to the high dip this year in his market prices. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Starbucks is the one that has obtained the highest score, and Archer-Daniels-Midland have been very close, so it will be a company to take into account in the future. However, over the last month it has had a bad reputation, which has caused its market price down around 25%. And this is one of the reasons that I will try to avoid in order to not having big downsizes in my portfolio. As a result, Starbucks will be our pick of February. Then we enter the Scalable Broker and carry out the operation, looking for the SBUX ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%, but since Starbucks price is about €86, I will only buy one share. So introducing one share we would make an investment of 86.70, so adding the commission of 99 cents, the investment amounts to €87.69. I would like to emphasize that I made the purchase yesterday. Well, we go on to write down the purchase made in our Google spreadsheet. Today, I have a new Google Sheets tab that I have called Operations. Here I will record each operation, so I put the date on which I made the purchase, the Starbucks ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €87.69. Then placing the ticker in the first column as always, automatically will appear the number of shares and cost per share. We added it in the consumer discretionary sector, and as you can see, this investment will allow us to reinvest 0.03 shares annually via dividends. As we are already in the month of January, I will move on to the monthly value sheet, and in the month of January 2024 we will write the €614.54 that our investments are currently worth in the market before doing this last purchase. And also, as we will put the amount of €87.69 that is the value of Starbucks investment. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time,